It is my pleasure to welcome Brent Johnson. He is the CEO of Santiago Capital, and he really does just a fantastic job of explaining macroeconomic concepts. You've probably seen him out there in the news media, and we're going to dive in today and talk about a variety of things, not the least of which is the future of the dollar. And with all this money printing, a lot of people have questioned that, but I would always ask you to ask the Jason Hartman question, which is, compared to what? And we'll dive into that today. Brent, welcome. How are you?
I'm good. Thank you for having me. Looking forward to talking to you and your listeners today.
It's good to have you. And, you've probably explained this so many times, but rumor has it you brought us a milkshake today. And it's actually $1 milkshake. And it seems to be one of your core theories or thesis. And I'd just like you to maybe explain that to the listeners very briefly, because I think it's important for the rest of the conversation.
Sure. So I'm happy to do that. I have talked about it quite a bit, but it is really kind of central to the way I see things developing over the next several years. And it really goes back a couple of years ago, and I did a presentation. Well, I had seen this movie called There Will Be Blood, and it's a movie about this kind of ruthless oil executive who will just do anything to beat his competitors. And towards the end of the movie, he was trying to buy a piece of land next to his that had oil on it, and the guy wouldn't sell it to him. And finally, he just said, well, you know what? I don't even need you to sell it to me, because I'm just going to stick a pipe down into the ground. And even though it's on my side of the fence, I'm going to drink up your oil. And he said, I'm going to drink your milkshake. And so when I kind of started developing my thesis a couple of years ago, I explained to everybody that even though the Fed had printed a bunch of currency, starting in 2009, the dollar actually rose in value over the last 10 years. So just because you print currency doesn't necessarily mean that the dollar is going to fall,
right?
Or that your currency is going to fall. And so the way I tried to explain it was the whole world is printing money, and they're mixing this liquidity milkshake, for lack of a better word. But for several reasons, the U.S. at the time, the predominant reason was higher interest rates. And we still have higher interest rates, but they've come down a lot. So it's not as key a factor now. But at the time, we had a lot higher interest rates than the rest of the world. And so I explained that even though the rest of the world was doing the printing, we were sucking up all that capital into the United States. And as that capital flowed to the United States, it goes into the United States dollar, and it pushes the U.S. dollar higher, and it pushes U.S. dollar asset prices higher. And I largely think that's what's going to happen over the next, call it 2 to 3 years. I think the rest of the world, the U.S. included, is going to do fiscal spending. They're going to do QE. They're going to do MMT. They're going to flood the market with liquidity to try to counteract the deflationary forces. And I think largely what's going to happen is the U.S. is going to be the recipient of capital flows, and we're going to drink the rest of the world's milkshake, for lack of a better word.
Yeah, good. It's a really good metaphor. And Brent, MMT, modern monetary theory, has gotten a lot of interest lately. I don't know if it's sort of the over-entitled socialist element of the millennial generation that's brought that on, or Bernie Sanders, or what it is. But when so many people owe the U.S. government money or the U.S. companies money, and then taxpayers owe the U.S. tax agency, the IRS, money, the only way they can repay those debts is in dollars, right? And so that creates this sort of cycle, this vicious circle, if you will, of strength for the dollar, which should be getting debased, a lot of people would say. The gold bugs would certainly say that. Maybe speak to that a little bit if you can.
Yeah, sure. So, and I think one, I don't want to criticize anybody else's thinking, but one of the common mistakes that I've seen other people make is that they analyze the U.S. and they analyze the U.S. dollar in a vacuum. In other words, they say, we have all these debts that we can never pay off. We're going to have to print all this currency or do all this stimulus in order to ease the burden. If you add more supply, that's typically bad for the price. So the price of the dollar comes down. But what they forget, or what they don't properly analyze, is that everything's relative. It's a relative world.
Right.
Fiat currencies all float against each other. And the fact is that all the other countries are in the same situation that we are. And all of these other countries have these debts that they can't pay. All of these other countries are having deflationary pressures. So they're having to print currency as well. And what really, and until a new system is designed, or until a new alternative to the dollar is established, There's no other place to go other than the U.S. dollar. And now people will talk about gold, and people will talk about a basket of assets or maybe a commodity-backed pool. And yeah, that's theoretically possible, but it's just not a reality today. At least not a reality that global leaders and politicians are ready to move to at this point. Now, at some point they might be, but right now that they're not. And so what you have is when you have a situation where the dollar is the dominant currency, all of the debt is actually demand for dollars. If you take out a loan, you basically created demand because you have to pay that loan back. You have to service the debt, and then you have to pay that loan back in the future.
Exactly.
So that is demand for the dollar. And then what even less people realize is that there's two dollar markets. There's the U.S. dollar domestic market, and then there's the offshore dollar market, and that's called the euro dollar market. Now, that's different than the euro currency. I talk to a lot of people, and they'll get the euro currency and the euro dollar confused. It's basically just dollars that exist outside the United States. And in that market, there's at least 12 or 13 trillion that's owed. And depending on kind of how you slice and dice it and go into the dark pools in the shadow banking system, it could easily be double that amount. So there's an incredible amount of demand for dollars outside the United States. And when you look at other currencies, there's not typically a huge demand for other currencies outside their markets. What I mean by that is there's not a whole lot of demand for Brazilian reals outside of Brazil.
Right.
There's not a lot of demand for euros outside of Europe. There's not a lot of demand for Chinese yuan outside of China. But there is huge demand for dollars outside of the U.S. So when people focus on the supply of dollars and that we're increasing the supply via QE and that's going to weaken the dollar, I feel like they're just looking at half the equation. I actually put something out the other day. It was a little picture representation of Plato's allegory of the cave, where somebody's looking at the wall and there's a light shining behind them, and all they see is the shadows on the wall. Right. But to them, that's the whole world. Right. Yeah. Because that's all they see. But the real world's behind them. Yeah. And I kind of feel like when people
that's the light projecting the shadow. Right. Right. Yeah.
Right. And I kind of feel like the people that are just focusing on the Fed and the Fed programs, they're just looking at the shadow on the wall. They're not looking at the whole world. And the demand for the dollar is so high for a number of reasons, and that in my opinion, the dollar is still going to go much higher because the demand will outstrip the supply.
Yeah. I agree. So just a couple comments that are sort of maybe interesting. One is that, the thinking about the monetary system as we've all come to learn how it works, which is this crazy house of cards, smoke and mirrors game of deception. And you talk about magic tricks. By the way, I want to ask you about that magic trick you show in one of your presentations, because I'll get to that in a moment. I gotta get the secret to that one. It's amazing. But we realize that money is lent into existence, right? This weird concept that really takes a while to get your head around. And years ago, I got my head around it, right? That's fractional reserve banking era thinking. But also the fact that dollar demand is lent into existence. The dollar strengthening is lent into existence, or it's created by a taxing agency, by the IRS, right? One of those two.
That's right.
So with that said, does modern monetary theory actually work, or is it a pipe dream?
Well, it's a little bit of both. It'll work for a while, just like fractional reserve banking will work for a while, and fiat currencies will work for a while, but eventually they'll fail. Now, but these things can go on for a very long time,
right? Like decades or centuries, even, right?
I mean, there's a famous interview with Doug Casey, who's a longtime gold bug.
He's been on the show many times, yeah.
And there's a fantastic interview with him and Phil Donahue from 1980, where he goes through and lays out all the reasons that the dollar is going to fail, and he's absolutely right. They will. But this is 40 years ago, right? Or 50 years ago. And it just hasn't happened yet. Yeah. So I think he's right. I think it eventually will happen. But the point is these things take they can take a lot longer than you think that they can. And I think the modern monetary theory it's really just the next step in, socialized government, socialized spending. We've kind of gotten to the end of the Keynesian monetary game. The debts are so big now, it's just almost impossible to continue this game. And so I think the MMT is just the natural progression. Right. And I hate the idea, but it's coming. I mean,
Right.
you better just prepare for it.
Yeah. No, I agree. And so is universal basic income. That's
Yeah,
coming
yeah,
too, if
yeah,
you
yeah.
ask me, and all of this stuff. Yeah.
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 And I think that the one thing I want to make clear to everybody is when I explain my dollar milkshake theory and that I think the dollar is going to get stronger and I think the United States economy is going to dominate the rest of the world over the next 4 or 5 years. This isn't an American exceptionalism argument.
Right.
This isn't an argument that we deserve it or that we're worthy of it and that we've done better than everybody else. That's not it at
It's
all.
just a practical argument.
It's just a practical. It's just the way it is,
Mm-hmm.
and I don't necessarily like it, but you shouldn't necessarily invest for the way that you want things to be. You should invest for the way they're going to be,
Mm-hmm.
and I just think this is the way it's going to be.
Right. And speaking of, not liking it or not being fair, the thing you didn't mention is that, the major product of any government is its currency, in my opinion, at least. And the way to force your product onto buyers, if you will, is to have the biggest military the world has ever known. And I mean, that's the reason that, among what you said and that is the reason that the dollar is going to be the reserve currency for a lifetime. I mean, it's just not going to be displaced very easily. Yeah, we hear about, Russia and Brazil are trading outside the dollar, or China or whatever. These are like little things.
Yeah.
They're just not a big deal. Yeah.
Right.
Yeah. Okay.
Yeah. I mean, again, the reality is that one of the, I said there's several characteristics of this straw that we use to suck up the rest of the world's capital. The U.S. military is a very big one.
Mm-hmm.
I mean, global reserve currencies are taken. They're not given. We're not going to just hand it over.
Right.
Somebody would have to take it from us, and I just don't see anybody that's able to take it from us. Now, then people will come back to me and say, "Well, the U.S. hasn't won a war in 50 years. You lose every war you enter." Well, I think that's a little silly to say that. Now,
I think that's kind of like litigation. It's hard to really understand who's winning and losing, even after a verdict. Okay,
Right.
A lot of times there's a lot of stuff that goes on behind the scenes. So
Absolutely.
winning and losing aren't as obvious as it might seem, right?
Yeah.
Yeah.
Yeah, when they show the Super Bowl and the jets are flying over and they're singing the national anthem and they say coming to you from 180 military bases from around the world.
Yeah. I think you might be winning. Yeah, absolutely. Very
exactly.
interesting. So now bring us into, gold, right?
Sure.
Most people would consider, the Doug Casey, Peter Schiff crowd, they're on one side, gold bugs. And on the other side, there's the people that sort of believe in the dollar hegemony, right? But these two aren't like these opposing forces necessarily that most people make them out to be, are they? Tell us about that.
Yeah, this is kind of a big frustration of mine, is that I'm a huge believer of gold, and I'm a huge proponent of gold, and I know many people in the gold world, and they're good friends of mine, and I think people in the gold world are among the most generous, well-intentioned, hardworking, all that kind of stuff.
Mm-hmm.
And I firmly believe that gold is going to go much higher in the years ahead. I think it's going to at least $5,000, potentially higher than that. I just don't necessarily think it's going to happen tomorrow.
Mm-hmm.
And for some reason, part of, a couple of years ago when I started talking about the dollar getting stronger, a lot of my friends in the gold world they didn't like it, and they would send me messages or text messages, or they'd call me and say, "Brent, how can you say this? That the dollar's a horrible currency," and I get it, it is. It's just better than all the others, but they didn't like it that I said that gold and dollar could rise together, because if you go to any gold conference or you listen to any gold presentation, one of the fundamental arguments for owning gold is the debasement of the dollar. And I'm like, yeah, that's fine. Maybe the gold will rise versus the dollar, but the dollar can rise versus everything else. So they can rise together versus everything else. There's no reason you have to have all of your money in gold. If you had 50% of your money in gold, that would be a lot, in my opinion.
That would be an awful lot. Yeah.
That would be an awful lot. But then, the other 50%, you got to do something else with. So, I would have it in US dollar assets.
Yeah.
And I don't know. I don't really know why it's so contentious, but it really is.
Mm-hmm. Yeah. It seems like an overly simplistic argument. And I think it has obviously failed, because it does seem like, since 1971, when Nixon closed the gold window, everybody thought the dollar was kind of over, right? And gold did have its times where it definitely soared in there. But long term, the U.S. government and the U.S. Federal Reserve have really been able to kind of defy that gravity. I don't want to say defy gravity in general, but defy that gravity that they,
Sure.
the gold bugs have put out there, right?
Yeah. Yeah. And again, I think the gold bugs are going to be right. This is all going to end really, really badly.
Yeah.
I just
But it
think
might be 100 years away. Right?
and I think it's going to end badly for other fiat currencies before it ends badly for the U.S. dollar. I think that there's going to be a progression of the falling of the dominoes, so to speak. Yeah. And I think the U.S. dollar is likely the last domino to fall.
Yeah.
Or gold is going to be the last man standing as all the other fiat currencies fall.